Hey, Drew, it's so great to see you. And I'm looking forward to a really important conversation that we're going to have today about something we've discussed recently, banking as a service 2.0, which we're defining as the evolution of money mobility from instant payments disbursements to the rise of sender-centric digital banking ecosystem. So thanks for making the time.
Nowhere I'd rather be. Good afternoon.
Good afternoon. All right. So I want to make four key points as a bit of a setup, and then let's get into some questions. So, first point is that you and I have had many, many, many conversations over the last 6 years about instant money mobility's evolution from P2P, gig platforms to gig worker payouts, large corporates paying out insurance claims, even now small business vendor payments. We have restaurant and hospitality operators paying out tips to their workforce, property managers paying vendor payments and renter refunds. Money mobility has become a horizontal. You would agree with that, correct?
Absolutely.
All right, so that's point number one. I think point number two is that the demand for instant is absolutely now increasing. It's almost expected. It's chosen 80% of the time when presented to a consumer as an option, and it's valued enough for consumers and businesses to pay for not just the speed of the payout, but the certainty that the money will, in fact, arrive in their bank account and be safe to spend when they want it, which is instantly. You would agree with that too, right?
Who doesn't want their money instantly?
I mean, who doesn't? Third point, senators are now starting to see the value of moving from payouts to embedding these digital banking capabilities inside of what we're calling these sender-centric ecosystems because they want to add more customer value. And there's also an opportunity to think about new payments economics. And that's really interesting, fascinating, something we're going to dwell on more in this conversation. But the flip side of that is that this interest is coming at the same time as these banking as a service ecosystem players are kind of melting down and the red flags of risks are flying everywhere. So that's the setup. Now the question. What's behind the interest in large corporates and platforms who make disbursements to consumers and vendor payments to small businesses and others to really create these sender-centric ecosystems right now?
I think it's okay. We had to do instant. Everybody was focused on, how do we digitize these payouts from checks, maybe even ACH. And now that that's up and running and the bills are flowing and they're beginning to look at the economics, they're really beginning to go, how do we convert this into a revenue opportunity instead of a cost opportunity? We've got a captive customer base here. We've got an ecosystem. Talk to me about how we can turn the tables on this. So I really think it's the evolution is financially driven.
So it's gone from embedding instant to monetizing instant in new and interesting ways.
Absolutely. And something I've preached against, by the way, for the last 6 years, but vertical after vertical after vertical, client after client after client. I didn't say I was the smartest guy in the room, but I do try to listen, and it's what the market's asking for.
I would agree with that. I want to see where though the demand is coming from. I said that money mobility is a horizontal. I mean, another use case that is so prevalent is online gaming platforms and winnings. Where are you seeing interest beyond, the classic P2P, kind of where money mobility started to where you see the demand now coming?
The recurring use cases is where it's really of most interest. We've talked a lot about ad hoc payments, which are still important, but when you're talking about hospitality and they're moving restaurant workers from walking out with envelopes of cash every day to walking out with digital payroll every day, those are very attractive use cases. It's an ecosystem, it's a unique set of people, and they're funded every day, right? Transportation, trucking, same kind of deal, only it revolves around the lending portion of that, or the payment portions, property management, gaming. I mean, that's just money in and out, in and out, in and out, right? The same people. And even in insurance, there are use cases in there, such as agent commissions, et cetera, where these are recurring payments within that ecosystem. And that's where we're really getting the demand. How do we, this is the same people, how do we create a better vehicle that is more cost effective to fund and presents other revenue opportunities?
And you're finding that instant is now being regarded as table stakes versus a nice to have?
In most of our use cases, that's all they want to offer with us, right? In insurance, they offer a broader variety of choices, including checks and wires, but that's largely driven by the regulatory environment. They have to have a default mechanism that anybody can get paid on, which is part of what we can help accomplish with this embedded instant. But they also have large dollar transactions. So all of the different, sometimes you just need those other things. But in the most of our verticals, it's nobody wants to talk about ACH. We push it because you need to make sure you can pay everybody, you need choices. But
I want to talk about how your platform is designed to enable this evolution, because it is more than just payouts and embedding instant into these platforms, into these sender-centric ecosystems. It is to help senders create a better user experience and to monetize these payouts. But your approach is different than we've seen others take. Instead of API enabling a bunch of third-party providers, you've built your own proprietary tech stack. Why is that?
let's look at it. Let me come at it from the other direction. We built a proprietary tech stack to solve for payouts choice, and to solve for it safely with some of the biggest companies and most compliance focused companies, I guess, in the market. And so all of that, what we call money mobility, that ability to easily fund from any kind of modality and move money out to all the necessary modalities, is what we call money mobility. And I think unlike most of our competitors, we've built software to help enable the customer experiences and the touch points. We commonly refer to that as our SaaS platform, which isn't necessarily the best descriptor of that. But what we mean by that is to solve for, in a non-digital only environment, which is a lot of where we play in addition to the digital environment, to solve for those use cases of instant payouts, we had to build software to manage the outreach, the interaction, the risk management, the authentication. So this is just natural to us to embed another modality in there, which is, oh, you want another account, you want a special account for this, you want a new account for that. So embedding instant in the payouts of our existing sort of ecosystem, I think, is unique in the market, because we're not trying to get everybody in the banking business. We're trying to solve for our sender-centric ecosystems here, to give yet another choice to make sure you can pay anybody, and to make sure there's an option for some better economics that our clients can work with to try and incent some behavior that's more favorable to them and the consumer, honestly.
Can we talk through some of the concerns, though, that particularly these large senders who have different, risk profiles, risk tolerance, and want a bank grade kind of a solution to support what we're talking about? Let's talk about some of the things that represent points of friction as part of the decision process. And you mentioned risk and compliance, and looking at oversight across many different third and fourth party providers that have to be assembled as part of that banking as a service solution. What are some of the questions you're getting from corporates who are contemplating this but are worried about that piece of the business?
Well, if they're worried, the questions we're getting, if they're worried, is because they're reading the paper, right? Or they've heard out there that, BaaS is blowing up, or BaaS is dangerous. And some of that's real, some of that's overblown. Certainly there's regulatory concern been expressed by the OCC around this area. So the conversation with us is really to help explain to them, that's a different world, right? These are your customers. We know what the use case is. We know where the funds are coming from. This is not a big BSA AML issue. One of the things that you don't have to do is sign up a bunch of new vendors because we're building it into our payouts environment. So if you already have our engagement platform, what we call that SaaS platform, or our iframe, or even in the API, then it's easy without a new contract, maybe a different statement of work because of the economics, but to add this into your customer experience. And we've got everything covered, and all of the money movement parts, where the risk is, where the compliance is, and where the KYC is, it's already built into the Ingo platform, and it's proprietary to Ingo. I mean, we've been doing this for 22 years. We KYC and onboard new customers for banks all across the country, built into PayPal and Venmo and Green Dot and NetSpend and hundreds of brands out there, right? So we've been satisfying the compliance concerns of issuing bank accounts for our bank partners in our check cashing environment for a long time. And we've been meeting all of the different tests of fraud and compliance on money movement, moving billions of dollars in and out of these accounts. And so for us, it's all proprietary. All we had to add in was an issuer processor to the equation to create this great experience. And then something that we really care about is the experience for that end user. So we've built a full-blown digital banking experience, which we white label for these partners. So they don't even have to go down that road of trying to deal with the App Store and everything that's required in that.
What are you being asked by these large corporates now that you weren't asked maybe a year or so ago?
Well, a year or so, I think this may be a repeat, but a year or so ago, it was, how do we do this, right? And how cheap can you make it? And now it's, how do we make money on this? How do we turn this into something that's really valuable? And how do we create stickiness for our ecosystem? And how do we create, I think one of your favorite words is an ignition strategy, right? How do we drive adoption in the direction that's good for us all, using something other than just a transactional payout, right? How do we turn it into a recurring kind of relationship within our ecosystem? So imagine if you're in one of these operators that's got thousands of restaurants and millions of restaurant workers. That's a perfect little mini ecosystem there where they're paying these workers over and over and over again. And I used to be one of those workers. And so the first thing that happens after shift is you go sit down and you have a beer, at that restaurant or the one across the street. So all around each of these restaurants is a mini ecosystem where this group of people tend to congregate. And that presents quite the opportunity to build something special, not just be in the transactional business with the restaurant worker, right?
Banking is becoming distributed. Some think that's fragmentation, but there are so many opportunities within these large sender ecosystems to really create these very robust money mobility ecosystems. We've I think made a good case for talking about where you see opportunities, what the risks are, how to overcome the risk, how you've built your platform in order to accommodate these senders who want to create that better experience and monetize instant in new ways. How would you advise them to make the most of the opportunity? Are there a couple of things that you would advise them to do? And maybe the one thing that you'd wave them off and say, make sure you don't do that.
Stick to your ecosystem, stick to the customers and find a partner like Ingo that has been through many economic cycles and many regulatory cycles. There are companies out there with better programmers, maybe better UX people, better, they're good at connecting all kinds of rails. That's not Ingo, right? We're good at it. But that's not our forte. We're trusted because we're fraud people and we're compliance people, and we guarantee many of the transactions that we stand behind. And that's what I would look for if I had a lot to lose, like I was a big insurance company or a gaming company. And then, what is that third and fourth party vendor risk that I've got to deal with? Because that's a real thing for especially a Fortune 500, but really for everybody, right? So somebody with more ownership of the stack and the real chops, proven chops to weather economic cycles and to manage fraud at scale, right? And there's probably more than just Ingo out there, but that's what I'd be looking for, is one of those players that is well suited to my use case. And I always say that there's nothing wrong with 75 startups, and they have a lot less to lose than a Geico or a Caesars or somebody like that, right? So they can do things differently than somebody with a lot to lose, which is sort of where we focus our efforts in the market.
So what's the one thing that you would advise these corporates not to do?
Not to get enamored by fancy new shiny objects and types of technology and user experience, to really dig in as you're looking for a solution here, and not to repeat what I just said, but look for somebody with depth and track record, and that'll keep you out of trouble.
Thanks, Drew, for a great conversation. I look forward to the next opportunity to chat about the evolution of money mobility. I think, these sender-centric money mobility ecosystems are so powerful for all the reasons that we talked about. But I think, creating these digital banking opportunities inside of them with the full capabilities of a digital banking experience is a game changer for many of these companies that are looking to create a different relationship with their customer and to create the ecosystems that keep them engaged. So thanks again for your time.
You're welcome. Thank you.